I just let people in. We're good.
All right. We are live too. Some figures I hit the live button and I get a text message at the same time.
Oh,
It's
you know
like
how that works.
it's always that way.
Man, it's
Um,
dark in here. This light, I need my lights on. It disconnected from. It disconnected from my their Wi-Fi powered. Not
oh,
powered, but that's how I turn them on.
yeah, I hear you. You know what?
Oh,
You're lucky you're not over in Europe. You know, Portugal, Spain, part of France, all of it went out power for like 12 hours. I don't even know it's
I
back on
I
yet.
think it's still. I think they said it's going to be down for a couple days.
Wonder who's behind that?
Crazy. How is everybody
China or
doing? Welcome in
China
today.
or China or Russia? I'm sorry, I cut you off, Matt. Go ahead. You said
Uh,
I cut you completely off. How's everybody doing? You're saying?
yeah, just saying. Yeah, just seeing how everybody's doing. Doing good, Jay. Having a good day so far. Awesome.
So far, so good. How
There you.
about yourself?
I'm doing great. I'm doing great. Appreciate you asking. If you guys are over on Facebook, make sure to let us know where you're tuning in from. If you're over on Zoom, drop it in the chat. Where are you tuning in from? I'm over here in Cincinnati, rocking the Cincinnati life. You know, just living life over here. We got beautiful weather. So, Mark, where are you from?
I am in sunny South Florida. We just celebrated our what was called Boca Bash.
Is that the
And
boat thing?
it is. It's the end of our season of the beautiful weather. Now going into summer, so it's like the third Sunday of April. Yeah, but this weekend we have a lot going on. We have the RNC show, we have big concerts and stuff, but now all the snowbirds tend to leave, and this was like the big bash of the year, and of now it comes into our warm weather where it's like your cold winter up there type of thing. So, but it's not bad. At least I can walk outside and sure the humidity can be uncomfortable. It's still nice, it's still beautiful, but the humidity can be uncomfortable. But for me, the cold hurts the body, in my opinion. It just hurts.
Yeah, Mark, is that Boca Raton? Are you
It
in Boca
is.
Raton?
Yep, it is.
Okay. Yeah. Yeah, I used to go down there years ago for business. There's a big IBM um, office there. Yeah,
Yep, I remember that. It was huge. Yep.
yeah,
You're talking 20, almost 15, 20 years ago.
yeah, yeah, yeah.
Yeah, they're long gone.
Wow.
Well, they're yeah,
We
cool.
got people
Hopefully
from
everything's good.
Charlotte. We got people over here from Charlotte, Pittsburgh, Sarasota County, over in Florida. Um, Let us know where you're tuning in from. We want to know what markets you're in, where you're looking to invest. That way, we can help you and see if we can help you with some deals. You know, we want to help everywhere possible, as many places as possible. So,
Matt, are you seeing any comments on Facebook? I'm not seeing anything over there yet.
yep,
I
we
don't know if
got
it's my
some.
side.
Yep,
Okay, cool. I
yep,
didn't know
we
if it was on
got
my side.
um, Alexandra is saying that my homeland has power outages on and off for the past 3 years. That's crazy.
That's crazy.
That's a lot of time. That's a long time.
Wonder where her homeland is.
I don't know. And
Yeah.
then we got Armando over there from Ohio. Well, that's me. Well, what's up, Ohio? Feel free to join in. I just dropped the link over there for Zoom. Feel free to hop in here over on Zoom with us. And if you guys are on Zoom, feel free to turn your cameras on, mute your mics, and talk. This is a time for you to ask questions. This is like a free coaching call for you, you know? We want to help you out as much as possible. As much as possible. But we're just scratching the surface. Just scratching the surface. So, Mark, oh, Ukraine. That's where, okay.
Okay.
Ukraine, yeah. I assume, yeah, they probably do have some power outages every so often over there. Awesome. So, Mark, you got any deals in the works right now?
Yeah. Several actually. And you saw that we just closed on a mobile home park community. So we got that wrapped up. So, but yeah, we got quite a few offers out. We got a couple offers out last week. Actually, I had a call today and I was so mad at myself. I got stuck on another phone call and I totally missed that one. I was like, oh, it was one I was going to wrap up and try to lock up, and then they got stuck. And so hopefully after this call, I can jump on. we should try to connect with that seller. So yeah, I love this market. It's just the market. I love the high interest rate market because it's better because sellers are having a hard time selling their properties, and I like it. It's a good opportunity where properties are sitting. Just kind of have to be selective in underwriting some deals. And I was just in my group. Um, I see these people posting, in the seller financing group there, and creating the posts are going back and forth. But a lot of these people, like when they're advertising their seller financing or creative seller financing deals, they're putting the ARV. And I'm like, well, why are you guys all putting the ARV? Because, we're evaluating properties as the as is value. We're not going off of the ARV. And that's from the wholesale world. When you're doing the fix and flip, you're kind of going off of that. But, us as investors, when we're buying properties, we always want to go off the ARV because most of these are turnkey properties, or we're putting tenants in there. We're not doing a fix and flip and making it beautiful and, trying to get top dollar for it, where the fix and flip guys are. So, we have to look at the values of the as is value. So keep that in mind when you guys are looking at deals, because especially somebody new that's coming in and you're seeing these posts out there and they're putting the property ARV, just be careful because that could throw your numbers off by like easily 25, $50,000. Because again, we're putting renters in there, or we're maybe a first time selling it to a first time home buyer, somebody that is looking for that. We're not selling it to the high end retail buyer, because how we make our money in seller financing, we make our money being in that spread and creating the arbitrage in monthly payments. So it's a whole different model. So just kind of be cautious of that. Otherwise, you can get hurt really quickly when evaluating your properties. If you're not evaluating a property, you always want to have plan B. So if something happens and you need to sell that property, you need to be able to sell it off of what that as is current value is. You don't want to sell it off the crazy inflated value. So just kind of keep that in mind.
Yeah, Mark, I noticed that when looking at it, it seemed like they're not leaving any room for anybody to do anything with the prices that they're coming out with.
Well, I'm okay, like buying it at 100% of the as is value as long as my cash flow's there. I'm okay with that. My model's a little different. But that is something you need to kind of be careful, like, a little plan, the backup plan to be able to get out of that situation if something does happen. Um, and then also, it depends on how much, if you're trying to sell it to another buyer, wrapping it, making sure that if they're putting some capital down, make sure you're holding some of that in reserve. I always hold, depending on the state, I hold anywhere between 3 to 6 months reserves, depending on the state. So if something happens, I have to step up and make those payments. I like to use my end buyer's capital to get into those properties. That's my strategy. I like to get in, as you saw, Jay, I like to get into these properties with no to zero money down and use my end buyer's capital. That's how I like doing it. Negotiate a really good low down payment with a seller, and then turn around and do some due diligence period, and then go out and find my buyer or have my buyers lined up ready to go type of situation. So cool.
Awesome. So, Mark, when it comes, so you have the mentorship program, right? Are you seeing a lot of people closing deals right now?
Yes. I mean, the market is so hot right now, where they're all doing it. Now, one thing though, if somebody's new coming into it, it does take a couple more months than normal because it's a different process. And then 70% of the deals come from follow up. So you have to build up your pipeline, start pitching these people the creative seller financing transactions type of situation, no matter what it is, what strategy it is, sandwich lease option, agreement for deed, land contract, subject to. So depending on what they're trying to accomplish, um, that would determine on the type of strategy that I'm doing for that particular one. But like 70% of my deals come from follow up. So make sure you have a really good follow up system in place to be able to follow up and get those deals in, because it's all about, they're still trying to sell it traditionally. That's why I like to find properties that have been on the market sitting there for like 3 months plus, because those sellers are feeling the pain a little bit more. Now you can still find, like, it's always good if you're a wholesaler and that's been your model is doing wholesaling. But if your wholesale numbers don't work, that's why it's always good to have another tool in your tool belt to be able to do another like creative seller financing strategy to help the seller out. Because sometimes that your wholesaling fix and flip model, the cash model where they rent it doesn't work. So you need to have alternative strategies. I call it a tool, like having a tool belt, depending on what the seller's needs. That would depend on what the seller's tool is. Okay. But you guys bring your questions. I want to see some questions. I like answering questions. So if you have questions, just kind of jump in here and just raise your hand, or even jump in and just start talking away.
Awesome. And then also, just real quick, before we get really started, Mark does have a mentorship program, and it's an awesome program for everybody to hop on and get direct questions answered by Mark. Mark, how much experience do you have?
Well, what are we? April still, right?
Yep.
Probably another 2 to 3 weeks. It will be 30 years. 30 years. In 1995, I started in May when I moved from good old Vermont down to the Washington, D.C. area. And that's when I really started getting into doing the real estate banking world. But I did my first deal at 19, but I had 30 years experience. I've done thousands of transactions over the years, over $500 million of real estate transactions. I've been doing this a long time. So nowadays I'm very selective in my deals. I get so many deal flows coming in. To be frank, sometimes it's hard to keep up with the deal flow.
That's pretty good. That's pretty good. It's a lot of experience. So, guys, if you are wanting to learn from an actual seasoned veteran instead of some just guru online that is just coming up with a course because they want to sell something, make sure to just find out about Mark's program. It's a free call. It takes 15 minutes just to see if it's a good fit for you. We want to make sure that he's able to help you, right? Some people are in a spot to where they're not ready yet, but Mark has a great opportunity for you to get started inside of seller financing, whether you are getting started or in real estate, getting started in real estate in general, or getting started with seller financing, because a lot of seller finance beginners have 3 to 4 properties, maybe 10 properties, and they just need money to put down. They're tired of putting money down all the time. So this is a great opportunity for those that are looking to get into a new space. So if you guys want, I'm putting a link in the chat, and we can get you more information. Just schedule a call. It's 15 minutes and it's free. No hassle. No, there is no selling on that call either. So let me uh
All
let me
right,
get
let's bring
let me
some
get started.
questions, people.
Yeah. Bring the questions. Bring the
Good.
questions.
And that is one of the things that I do end up working with people mainly is what you said there is usually people that already have like a few properties and are looking to learn other strategies. That's typically the ones I usually work with. So it's good. And I like that because I don't just bring people in that have no, that I need people that take action. But anyways, let's ask some questions here. Um, I'm open.
All right. Yeah. Guys, drop questions. We are here for you. I'm over here on
So
Facebook.
you know an investor that was been on the last couple of weeks, that is buying a seller subject to no, is it subject to or straight seller financing in that one from somebody?
Subject to.
Okay, cool. And so they're buying it through a subject to, and that's one of the places where I get a lot of my bird dogs from. A lot of my deals from are from bird dogs. I have over 600 bird dogs that I built up over the years. For example, like trashmen, they know the neighborhood, landscapers, snowplow removals, Uber drivers, pool cleaning people. But where I get my home run deals are hospice nurses. That's where I get my really, really good deals coming from. So just make sure, in this particular case, they're doing, this gentleman is ill, if you will. And the family, I don't know if the family lives in the area or if they're out from the area, but it's too much for them to deal with the property. So they're just selling it to this other investor. He actually did some wholesaling, and this is his first creative seller financing subject to deal. So he had some great questions last week on trying to take it down. He was kind of concerned about how to lock it up. So just get in there, lock it up, and just start learning and just start practicing. That's really the best way how you're going to do it. But make sure you're doing things the correct way and ask questions. Like the biggest thing is insurance. Also, like how you're going to hold that property in a deed, because so you don't want to trigger the due on sales clause. Um, I don't know if anybody here knows what a due on sales clause is. Jay,
Go
do
ahead
you
and
know what a
explain
due
it.
on sales clause? Do you know what a due on
Yeah,
sales clause is?
that's when the bank finds out that there's another owner or some sort of transaction going on, and they want to close. They want to get paid right then and there, or get paid what they're owed before that transaction.
Yep, exactly. So what happened was in the 80s, all mortgages now have a language in the contract, that if you're transferring the property from one seller from the borrower that qualified a mortgage to somebody else, that triggers the due on. They could have the option to trigger the due on sales clause. Years ago, the lenders didn't care about it, long as the payments are being made. Nowadays, they are starting to be a little bit more concerned about it and paying more attention, because what's happening is these people are just putting this structuring a deal with the seller through what's called a subject to. And subject to is just one type of seller financing strategy. And then they're just doing an assignment and not even qualifying the end buyer to make sure that the buyer can afford it. And they're defaulting on it and putting the seller into a bad situation. So, and then when the seller goes into a bad situation, then the lender's in a bad situation, and then the whole title and deeds all messed up. So then they have to spend all this extra money trying to untangle the mess. So that's kind of why you need to make sure you have it set up correctly. And then there's other alternative strategies. For example, if a seller is not financial distress, there's no way I'm going to go pitch them a subject to. And well, first of all, I want to make sure everybody know what a subject to is. Most people do. Jay, do you know what a subject to is?
That it's subject to the existing mortgage.
Correct. So, yep. So what you're doing is you're keeping the existing mortgage in the seller's name, and you're transferring the deed over to you, and you're making the payments on behalf of the seller. That's kind of what the type of transaction is. So that's one type of transaction. Then you have what's called a sandwich lease option, agreement for deed, land contracts, installment sales, novations. So there's all these different strategies. But again, what I was talking about earlier, if a seller is not financial distress, there's no way I'm going to pitch a subject to hey, Mr. Seller, keep the mortgage in your name, transfer the deed over to me. They're going to look at me like I'm crazy. And if you're working with a realtor, the realtor is definitely going to advise the seller, oh, don't do that, that type of situation. So that's why you come up with a different type of strategy, an alternative strategy to work on helping the seller out. It could be like a sandwich lease option. That's how I first started doing my creative deals back in the day. I did a lot of sandwich lease options. So what it is you're going under contract with a seller as a rent to own. You work the terms out, you work the payments and all that stuff out with them. You negotiate. Like what I usually do is whatever the market rent is, I try to negotiate about $250 underneath the market rent, and it allows you to sublet it and then put your end buyer in there and try to negotiate like $250 over market rent. So you're cash flowing $500 a month, and you can get into that property really cheap, maybe 1 month or 2 months down, because I tell the seller I'm taking care of the maintenance and repairs. So that's another type of alternate strategy. Then you have agreement for deeds and so forth. So that's really what it comes down to, is understanding all these different strategies and be able to help the seller's needs. Now, the other thing I'm going to talk about is when you're doing these type of strategies, seller financing, and Jay, I think you heard me talk about this many times, is when you're doing a creative seller financing deal with a seller, it all comes down to the one thing is why they're going to do business with you is because they like you and they trust you. So 80% of my phone call, 80%, it might even be 90%, quite frankly, is building a rapport with that seller, because you're in a commitment. It's like a marriage. You're in a contract with these people, whatever it is, maybe 3, 5, 7, 10, 30 years, whatever it is. So the first time you're meeting with the seller, treat it like when you first met your significant other, your spouse, the first time. You're getting to know each other. I want to know them, and I want them to know me. They're interviewing me to make sure I'm going to do what I'm saying to take care of the property, and I'm going to make the payments as we go through. I want them to trust me, and I'm interviewing them as well to make sure they're not a crazy seller. To make sure that I've had those. Hey, where's my payment? The payment's due on the first, and they're calling me on the 18th. Where's my payment? I have had those before. So, and I've walked away from deals because I could tell a seller was going to be that type of a seller. Even though I set the expectations up front, they still can be a pain. So you just kind of make sure and just really build a rapport with them. As long as you understand and you guys build a rapport with each other, there really shouldn't be issues. And then even during the holidays, like I reach out to people, how's everything going, and even my buyers every so on. So it's all about relationship. So make sure that they do, and then to have them get to know you so they can trust you. So, anyways, Matt, we'll kind of come back to you for a second.
Yes, sir. No, you're doing great. I mean, you're providing tons of value. So, dropping the knowledge bombs. Boom.
That's right.
You think so, Joel?
Of course. Can I ask a question?
Of course. Go right ahead.
All right. This is something that I haven't heard anybody speak about. Um, is what happens if the seller dies?
Sure. So I've had sellers pass away. So
Mhm.
what you always want to do is you want to set it up in a way where if something's happening to the seller, that they don't have to go through probate. Because when it goes through probate, that's when the issues occur. So typically what I do is I put my properties, whatever strategy I'm buying it in, subject to seller finance, whatever it may be, I put mine into a trust. Okay. Then if there's equity and if the seller is going to carry a note, what I typically do is I will have that note put into the seller's trust. So if anything happens to that seller, it automatically goes to the beneficiaries, the heirs of whatever that may be. And then I always tell them to make sure, if they have a retirement bank account, to add themselves to all the beneficiaries. Again, I'm not an attorney. I'm just explaining how I do my stuff. But I always help them out, and I'll even pay to have their mortgage put into a trust. A title company can do it. It's really cheap. You can get a family trust set up for like $1,500 and have everything put into it. And I've done that before. I have no problem paying that. So if they do pass, everything stays in place. I'm paying right now on a mortgage that a seller passed away, God, 4 years ago. And I'm still sending checks out to the family members. The only difference that happens is the check payment, I just change the name of whoever the new beneficiary is on my payments go out. So I have my payments going out automatically and auto bill pay every month. So it's always going out. So it's by to the seller by the first. So usually mine go out on the 20th or 25th of the month, depending on how it's going out. Did that help you, Joel?
It did. Yeah, I appreciate it. Can I ask a follow-up questions or no?
Sure. Where are you located?
In Boston,
Okay.
Boston, Massachusetts.
Whereabouts?
Melrose.
Okay. Nice.
Are you familiar with
I'm from
Boston?
Yeah, I'm
Well,
from
well,
Killington, but yeah, I'm from Killington, but from 2009 to 2017, I spent my summers in Marion, Mattapoisett, down near the Cape. So that's why I love this business. I can do it from anywhere, and that was one of the things.
yeah. Hey, Joel, I'm originally from Boston myself.
What? What part?
I was in the Back Bay area, South End.
Okay, okay, okay.
Yeah.
How long ago did you leave?
Oh, I left about 20 years ago.
Oh, okay. It's been a while. And you haven't been
So what's
back
your
since?
No, not with the winters you guys have been having.
You got used to
uh,
it.
cool? So what's your follow-up question, Joel?
All right. Insurance. So how do you, because I know I have to get insurance on take the insurance, making sure we don't keep the insurance under the seller's name. But my question is the timing of it, because I don't want to alert the 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 lenders to question, hey,
You,
what's going on?
yeah, you do need to keep it in the seller's name
Oh, keeping the
as
sellers.
well. You
Oh,
need
okay.
to. Yeah, otherwise it can trigger. That's one of the biggest red flags or triggers to do on sales clause. That's how most of the loans back in the day used to get triggered by that. So typically what I do is I put the properties into a trust because so it looks like it's for estate purposes, and then the trust is on there and they can sign on behalf of it. Um, and then also I had the seller's name on there as well. And then typically I get a limited power of attorney so I can deposit those checks if there's any issues. And then I usually have my company or my trust. See, my company is also listed as a beneficiary. And then if you're putting your buyer in there, you put them listed on there as well. You need all three because the lender can trigger a joint sales clause. And then if you don't have your buyer's name on there and there's a fire or something happens, the insurance company can decline it because the person of ownership of title is not on that property. So that's kind of why you have to be careful of that. So you list everybody on there.
Okay, yeah. That's
Just make sure you have a good, just get it, make sure you're working with an insurance company that understands all that.
got it. Thank you. I appreciate it.
Cool.
Yeah, that's huge. You got to make sure you don't get that due on sales clause called when it comes to just a simple. I mean, that's a simple paperwork thing, you know. So
I just want to say something. Hey, Jordan, you missed the private community group call today at 5:30. I'm
Oh
not sure
man,
if,
I
yeah,
totally forgot about that one.
yeah, that's the one for all the members on that one. That's where we really deep dive and stuff. So just remember that. And then tomorrow, at 7:30 Eastern Standard, you have the deal analysis, weekly call on that too.
Okay, cool.
Cool. And then on Thursday, we have the accountability call, but you don't need that one. I would just recommend Mondays at 5:30 to 7, and then the deal analysis, deal structure tomorrow at 7:30 to 8 Eastern Standard.
Awesome. Hey, Mark, I do have, well, we could maybe chat. I don't know.
Go ahead.
I've got, I've got a seller that's got, I just don't know how to, it's not that I don't know how to underwrite it. It's just, this guy's got 19 mobile homes in, over in Newport Richey area in Pasco County. And he's bringing in about 207 is so these are all on separate parcels. So it's not a park. It's just like on two different streets. It looks like it's in a park, but it's not. Anyway, you own the land. They're on different parcels. He's grossing about 207. I think his net is it's about 97. And anyway, he said he was asking like 1.6 million, which I think is crazy. And anyway, he got an offer about 1.1 million, which I thought was not terrible. But he's still uncertain, and I'm thinking that person's probably just trying to lock it up. But I went and looked at them, and I just really just drove by because I mean there wasn't much to look at. But these things are very 60s, 70s, some 80s. I mean, but they're old. And what I'm saying is, my thing is, these trailers they really have zero value at this point. He's selling an income stream, so he's selling, and it's just trying to, because he said if he were to keep it, he would probably be replacing, some of them, and obviously that comes at a high cost to replace them, but or if you bring some used ones in, but there's still money to be. But he's renting them all. Like I said, he's gross, or he's netting about 97, almost $100,000. I don't know. I was trying to come up with just an offer on that, but only way I thought it made sense is if we could get some kind of seller financing to, maybe like, and what I was thinking, my inclination was, like 100-ish down or something, and then goal would be to then just exit and literally seller finance every last one of them for about $100,000, get $10,000 from each person, and you give him 100, you've got maybe a little bit extra if you need to go and fix some of them, or replace one or two or whatever. So anyway, that was maybe the thinking there, only strategy. But I'm sure the caveat, I guess, is he also he's got four other siblings to pay out, to, and so he would have to hold it for at least, I don't know, 5 years or something for this to probably work. So I could then refi it out. But anyway, I don't know what your thoughts. They're just so old, and I'm also thinking most of these people that are living there are likely probably not probably interested in buying these things either. So I don't know.
Sure. So siblings, that he inherited this property?
Yeah, he did. Parents owned it for he's owned them for like 40, 50 years. The parents,
How
and
long
then
ago? Yeah, how long ago did he inherit it?
they now own them. They don't have to go through a probate or anything like that. So he owns them. They've owned them for several years. So I don't know what his stepped up basis is, but if that's maybe what you're going down.
And does he have mortgages on these things?
They're free and clear.
So he's probably netting more than that. He's probably taking in that net of 97, he's probably taking his money out of it, is including in that probably.
That could be possible. Yeah, possible. Yeah, because well, he does have, he's got property management on him, I'm sure. But anyway, you know, he's a, I think he's a very understandable guy, and he could tell I was, within the business and knew what I was talking about. And so, he lives in Washington, so it's like he's just trying to, you know, figure out what his best move is. But anyway, I think that he said they did have them appraised, and they all appraised for like about $68,000 a piece, which I think if you do the math on that, it's maybe, I don't know, 19 of them, whatever that is. That was like a year or two ago. So that's like almost like 1.29, so almost 1.3. I'm surprised they even appraised for that, to be honest. I think,
So do they, has he talked about seller financing? Have you even brought that up?
yeah, I did bring it up, and he said, that obviously that would have to just, go to the table and, talk amongst the siblings to see if that would be something they'd be, because I mean, they would still be getting cash flow to some degree.
Mhm.
Obviously it would have to, likely it would be maybe less than what they're currently getting, just to make it
They
make
don't have the headaches. They don't have the headaches either.
sure. So that's probably the only strategy. And I don't see this as being able to, if you're buying this cash, I mean, I don't think you'd have to buy this for so cheap. It would, he'd probably
Yeah,
say, not a chance.
I agree. We're on the same path. I would, if it's cash, it's going to be,
Yeah.
definitely something that's worthwhile as us as investors, or,
Yeah.
um, or, I would try that. If they don't do that, then maybe you can also do like a consulting agreement with them and help them sell each one
Yeah.
of them off like through a seller financing strategy too. If they're trying to
That's,
make more, but you should be able to do it the way what you're recommending as well. Just a nice,
yeah.
pay it and just kind of go down
Y-
that path.
Yeah. I mean, I was just thinking if I could, sell them all off for like 100 a piece. Actually, I think that because I think he said they were getting like, I don't know, I think it's like $1,200 is like an average of across the board of what they're getting for rent. And I did the math on it, even seller financing, I think they would actually save money on the monthly. It would just have to, but if you got 10 down, like I said, if you could basically fund the whole thing, if you got 10 down from everybody, you could fund, maybe 150, $200,000 to give him.
You're probably gonna you're not gonna be able to sell it to the people living there. Most likely they don't have 10K each. Maybe one or
That's,
two, but
you're probably
I
right.
doubt.
That would
Yeah.
not, you're definitely not going to fund 19 of them. No, you're 100% true. So, and most of them would say, yeah, kick rocks, that idea, I'd say. Because they probably also, that's the thing too. Like most people, they're not renting because they can't afford it. Some people don't want to buy,
Correct. They don't
some
want
people,
the headaches. They don't want to worry
they,
about that stuff. So you're
uh,
correct. But then, yep,
yeah,
I agree. Yeah, that's a good strategy. And then you can just find investors too if they want to stay in there. Maybe an investor will take it over 2 of the 10. So you have a lot of options. But the first thing what I would do is just cut a deal with them and just kind of work out the numbers. And then from there, then you look at all your exit strategies and different options.
yeah. Because I mean, you can obviously play with the numbers when it comes to seller finance. I mean, you can give him as, I can't give him, I don't think I can give him 1.6, but you might could give him 1.2 or maybe even 1.3 if it's, if it,
Well, you could actually show him on an amortization schedule who's going to get close to his value if you carry the note. Do you know how to do that with the
yeah, yeah,
amortization schedule?
yeah,
So
absolutely.
show them. Yeah. So and I've done this before. I had a seller on a multifamily. They wanted 5.7. This was Kentucky for 61 units. They
Yeah,
wanted 5.7. It wasn't worth 5.7. It was really worth 4.5. But I
yeah,
told her I'd get her 5.7 if she waits 7 years. And I
yeah,
backed the numbers in on the amortization schedule. I provided her an amortization schedule and I showed her over 7 years she was going to make the 5.7. She's going to get
yeah,
this down and become the bank and get the monthly payment.
yeah.
So that worked out well for me.
Yeah, when you can back it up, I mean, yeah, these people, tend to agree with you. So no, I think that's good. So I'll see. All you can do is make an offer, right?
Yep, that's all you can. Cool. So make sure if you jump on tomorrow night Zoom at 7:30.
Okay, cool. Thanks, man.
Yep. And those links, if you don't have the links, if you go into the Facebook group,
Yeah,
the members group there, the paid group there, you go under featured and all the links are in there, the Google Drive link to all the resources and all the weekly calls, Monday night, Tuesday night. And so, all right, cool.
awesome.
Looking forward to
Appreciate
working
it.
with you, man.
Yeah, man.
Maddie.
Awesome. I was just listening. I was enjoying that. Uh, we're talking 1.2 million, right? So or 1.12. You're
Oh,
you're
well, those are the best deals for seller financing, those, and they're open to it, especially, if they've been holding it for a while, they've already used to the cash flow coming in. They just don't want to deal with the headaches anymore.
now why is that? Go ahead and talk about that a little bit.
Typically, they just become tired landlords in most cases. Once in a while, you need somebody that may need some cash for whatever reason, um, one of the sibling members, and there's different ways that can happen. And then sometimes I've seen it where one of the other siblings bought the other sibling out, for 50% of whatever their share was, because the other sibling wanted that passive income. So keep that in mind too when you're structuring that deal there, Jordan. So if one sibling needs more money, another sibling can kind of buy them out. But they can talk about that amongst themselves. But that is another option too. I've had that happen. But I've purchased so many properties like that type of situation, like usually through inheritance, or just like the one where your investor friend's doing it. I mean, look at the deal your investor friend. How much is he going to get into that property for that he's structuring?
0. Well, the cost of
Zero.
the LLC, which is like $100.
Yep. So he's getting that with no money down.
Yep.
See, they're
Um,
there.
yeah, they're out there. People have them.
You
We
know,
had,
we you had a question?
yeah, we have a question from Christos. It goes back to the insurance. Back when we were talking about the insurance, he was just wondering, can you add your name to the insurance with the trust?
You can. You can do that. Or you can also put yourself on there, like if you're carrying a note or something, you can add that as like a lien holder on the property as well. So yes, you can do that. But make sure the seller's name is always on there somewhere, or the trust name. So make sure it's in there so that you don't have any issues with the due on sales clause with the lender.
Awesome.
Cool. So,
Awesome.
talking about that zero down deal, like we're analyzing a deal today with the members, and so one of the members had a deal, and the guy wanted roughly about $5,000 over the as is value, and the seller wanted a 9.5% interest rate, right? Typically, we're like, I don't know about this one, but the seller wanted only $1,000 down, and as is would be $525 a month cash flow. Would you do that deal? I would do that deal in a heartbeat,
Yeah,
you know,
100%.
and it amortized at 15 years. So you can hold that deal on seller financing, put tenants in there, and only cost you $1,000 to get in that deal, and he's willing to do it 1,000. So for me, I'm okay paying or even paying a little bit more in rate as long as my cash flow is there. I have no problem doing that, especially if I'm getting in a deal with what's your return on that? You're putting $1,000 into a deal, and you're going to be getting your capital back in like 2 months, maybe 3 or 4 months because you got a little bit of closing costs, but you're going to get your capital back with it. For me, I always like to do it. That's one of the things I look at. Whatever capital I put out, I want my capital back in 12 to 18 months. If I don't get my capital back in 12 to 18 months, I don't do that deal. I see some of these people do deals, and it's going to take them 5 years to get their capital back. I'm like, Jesus. I could take that capital and deploy it into several assets and get that capital back returned much faster. That's why I don't mind putting $1,000 down, because instead of, he originally wanted 10,000, but most people are going to want probably 10, 20,000. You can take that difference and buy another asset. For it
Yeah.
only costs you $1,000, you have money left over to go ahead and put that into another asset. You get two assets and you'd be cash flowing an extra $500 a month.
Yeah. I mean, I don't understand why people invest the
It,
other way.
I see these deals posted in the group, and they're trying to get an assignment fee and these cash flow deals. I'm like, why didn't you take this deal down yourself?
Uh,
You're leaving so much money on the table. I just don't get it. I mean, you're
mhm.
still making the same amount of money up front if you do it the right way. Then you're going to cash flow and get all the cash flow coming in. This one deal I was looking at, it was going to cash flow $700 a month, and I tried getting to it, but he already locked it up with somebody else. And I'm like, why ain't you taking this deal down yourself? Because I'm trying to build up my reserves and blah blah blah. I get it, but if you structure it the right way and get a large enough down payment from your buyer and hold some money in reserves, you always want money in reserves. If you don't have money in reserves, then that's where you get yourself into trouble. But if you do it the right way, you kind of learn it the right way, you can stay in, and then bring a capital partner in. I mean, $750 a month, you can easily bring a capital partner in, ask them for $20,000, $30,000, and be a part of that deal and still give them a piece of that deal. I'm just like, so that's why you really need to understand these type of strategies. And I get it where, they kind of get scared of kind of that part of it and they just want to build up the reserves. But if you do it the right way, you can still make the same amount up front and cash flow and get that passive income coming in. So
For sure.
anyways, anybody else have any questions?
Well, real quick, I want to throw it back out there again. If you guys like, you heard Mark talking to Jordan about the mentorship program. If you guys just want to learn more about it, it's free to learn more about. It's a 15-minute call. There's no sales to it. Just hop on a call, schedule it below. I am posting the link there. Just schedule a call. It's free to do, and it'll take 15 minutes. There's no sales on it. It's just to see if you're a good fit for the program and to see if it's a good fit for you. So we got Alexandra saying, "Good to see you, Mark," over on Facebook.
All right. Pleasure. For some reason, I can't see my comments over here. So thank you, Matt, for that.
We got Justin Maynard. Yep. Small world, brother. Yep. How you doing, Justin? Zero down. Keep working it. There we go.
You know Justin? I don't think, do I know Justin?
I don't think you know Justin. I know Justin.
Not yet. Hopefully I get to know Justin.
Justin's a good guy. He's crushing it. And
Awesome.
if you guys are over on Facebook, I'm going to go ahead and drop a link for you to join over here on Zoom. We got about another 20 minutes. So this is a time for you to get your questions answered on Zoom. All right. All right, guys. It's a very light question night tonight. Not too many questions so far.
They're loaded. Last week, they're all
I've
loaded
got
up like crazy.
yeah,
Jay
I've
had
got
a
another
question.
question. Yeah, you don't hear much about it anymore. In Florida, used to be real big into this, but assumables. You just have the qualifying and non-qualifying assumables. Do they still do that anywhere or anymore?
They are. It's more of the FHA and VAs. Those are the big assumables currently in this market right now. And they're still there. I see some of them I see them advertised out there. But you got to qualify for those. You got to think you still got to go through the qualifying process. You got to show your income, your credit, and jump through hoops, appraisers. I don't know. I've done a couple of them, but I'd rather just do straight seller financing and work something out with the seller. Because it's a win. I mean, if it's great for the seller. I sell all my properties all through seller financing too. Um, in most cases, I'm in the process of selling a couple right now. I was approached by Dollar General on a couple of my properties, multifamily, and this on this main street, and they want to. So we're looking at selling that to Dollar General, but I'm actually now exploring it possibly instead of selling it, do it more of a land lease, so I can get get some monthly income coming off of that thing. So for me, I like the monthly income, passive income. I know these guys love getting those $10,000, $20,000 checks, but I like the passive income coming in. So if I want to take some time off during the months, and I do, I'm actually making some plans for the summer right now, taking some time off, so I could work remotely, but I have that passive income always coming in. That's one of the big things. And quite frankly, um, almost a year and a half ago, I wasn't doing any real estate deals for about 6, 7 months. I went through stage 3. So I was sick there for a little while. I was still working with my members and everything, but the real estate aspect of acquiring new ones and selling kind of took a back burner a little bit. I still had the passive income coming in, and I had great people running my management team and everything. But that's the beauty of having that coming in, that passive income. So they're still there, assumable mortgages. And that's something I look for. One of the things I use is a deal machine. And in deal machine, one of the filters I pull out, I look for tired landlords, non-occupied, and I look also for low interest rate loans because I want to be able to keep those existing debt in place. Even my own property, here, I bought this particular one on a creative deal on a sandwich lease option. And when I closed on, I had $57,000 of equity. And I have a 2.75% interest rate. My other half goes, "Why don't we pay it off? I don't want to have the debt," because that's how. And I'm like, it's free money. Why would you want to pay that off? It just doesn't make sense. I could just put that in a fixed CD and get a higher return than what my current rate is. So, anyways, they're still there. That's why it's. But it's bizarre, and I don't know if people know this. I was just looking because I love Portugal. I almost bought a piece of property over there. Portugal interest rates over there at 2.5 right now to 3%. Europe is still below. Europe is at a 4% interest rate in most of this country still. So we need our rates to come back down. But on the other side of it, I kind of like rates high because that's where I get these great seller financing opportunities. You know, again, when we had lower rates, nobody was doing these type of strategies. I was always doing them. Everybody else was doing it, wholesaling. 4 or 5 years ago, how many of you guys heard of these creative seller financing deals? Maybe Jay, you might have because you're older, but a lot of these people, Angela, she's heard of it as well. But a lot of these people, most of these people that have been doing this for the last 10, 12 years, never heard of these strategies. We all do these strategies because we've been around these strategies. You go through different cycles. And that's how I got into a lot of this, is because we went through one of these cycles many, many years ago. I started, I think the first cycle, I think was in 96, 97, where the interest rates jumped up. And during that time period, um, second mortgages are really, really popular, really popular. And I'm surprised they're not popular in today's. I thought for sure we'll be back at that. And they did some crazy stuff. They did like 125, 115 loans and 125 loans. So whatever the loan, whatever the value was, they're lending second mortgages up to 150% of the value, 125% of the value. Good old Dan Marino used to advertise that with First Plus. I don't know if you guys, some of you guys may not know who Dan Marino was, but he was a football player for the Dolphins.
Yep.
So I'm
know who
showing my
that
age
is.
here a little bit. I'm showing my age.
Mark, I have a question.
How you doing?
Good. I actually, I'm sorry. I think I'm in the wrong meeting. I was signed up to go to a different one and I ended up in this one. So it's okay. They were both kind of similar. So I appreciate you, but I wonder, I do make creative finance offers. I have not gotten any to stick. I've sold things on seller finance. But I always get tripped up when there's rehab. When I'm making an owner finance or a seller finance offer and I'm offering terms, because really a cash offer isn't going to work for me because they want too much, they need too much. But there are rehab needs. I always get tripped up on how do I handle that? One thing I have done is I've made the offer of I'll take on the rehab as the down payment. Instead of offering them money, I'm like, okay, I'm taking on this responsibility of the repairs and I'm going to pay for that and you don't have to do anything. But that's in lieu of down payment and cash. And so how do you handle those? And maybe I'm overthinking it when it comes to rehab, but I'm always like, oh, if this stuff breaks, then I'm gonna have to pay for it and it needs a new roof. Systems are bad, those kinds of things.
So you're in the right path. Exactly. That's what I do. I'm going to pay for that, or I do it. And then I even take it a step further. Oftentimes, I will structure it where I don't have to make payments for like 3 months. I've even done 6 months where I don't do payments on it. And then what I've done is I turn around and wrap it and sell it as a handyman special to an end buyer that knows how to do those things. Angela, that's in my group, she had a deal like this not too long ago. It was in Texas, and it needed like $38,000 of rehab work to kind of get it ready up and repair. It wasn't a lot, but it's still 36, and her money was all tied up in a fix and flip. So she was just going to do an assignment. And I'm like, okay, what's your assignment fee? She's going, I'm going to ask for 15. I go, when it's all said and done, what do you think you're really going to get? She goes, I don't know, maybe $10,000. And we structured it in a way, instead of her just making that money, she's making $171,000 instead, because she's wrapping it, selling it as a handyman special. So you market the property as a handyman special, typically like, hey, if I'm going to go ahead and fix this property up and do all the repair and get everything in there, I'm going to be looking for about $50,000, $60,000 to put down from the buyer. But if you're handy, instead, I'll take $12,000 or $15,000 down, and then the rest of that capital you put into the property. You do that as the handyman repairs. So she found a buyer like that, still got $12,000 down from the, and so she's still making the same amount of money up front, cash flowing over $750 a month off of that particular deal in that structure. But then what I also would do is whatever the repair amount is, I will create another mortgage. So let's say the repairs are like, in this case, $36,000. Okay, maybe 40,000. I'll create a second mortgage and tell them if they don't make the repairs and I have to make the repairs, then I'm going to go ahead and record that mortgage. If you do the repairs, then I'll just go ahead and record it. Then also I've done it sometimes where I have actually put it in escrow, and just like a lender, like, okay, I'll go ahead and release it. Once this has been done, we'll release the next set of escrow. So that's how I usually structure my type of handyman specials on that. Now, keep in mind, you really can't do a sandwich lease option on that one, because if that something happens and you have a buyer, you know, as a lease option, a buyer putting 30, 50, $60,000 into a property and they foreclose on it, and you go in front of a judge, and judge is going to, like, you know, at that point they have to have what's called equitable interest in the property to make sure. So if they're putting a lot of money into it, I would sell it as a wrap, a contract for deed, land contract, one of those, so they have equitable interest in the property.
Makes sense. Thank you.
Hey, Mark.
Sure.
Hey,
Hey, Jordan.
I was just, you were talking about Jay, or what's his name, had mentioned about assumable loans. One thing I've noticed with them is when people advertise assumable loans, I just always just think of, you know, obviously going subject to the route clearly. But I just talked to a lady the other day, and she was selling a house in Lakeland for $390,000. It was a VA assumable. Anyway, there she doesn't have a ton of equity. So I kind of went that route, and she's like, well, we've kind of heard basically somebody's pitched her subject to, but couldn't really explain it to her. Anyway, what I was going to say though is you can just go on, like, you can go on Zillow, and I just did it. But you can go on Zillow and just like go to, sometimes I'll do this if I'm bored, and you can just go to like, type in like, I'll just type in like Florida or whatever state you're in, and just go to the bottom with the keywords, and you can just type in actually assumable, and
Yep.
you can just, I mean, there's like thousands on here. So like, and not every one of them is going to be maybe the option for taking it over subject to, but there's quite a few in there that have refied back in like 2020, 21 or whatever. So they could be possibilities. So just for, you know, there's 1,470 I just looked up between houses and mobile homes. So anyway, just an option for you guys if you just are looking for something in particular. Just type in assumable down there in the keyword search, and just and then, but I mean, I'm always going the approach, and I actually just tell them it's like an informal assumption. So I just say it's an informal one. We just go about it a different way.
Just educate, and that's the bottom line. So there's so many ways of finding
Yeah.
sellers and deals out there. You
Yeah,
just got to
right.
be creative. Yep, you just got
Yeah.
to be creative. You can't be doing the vanilla route, you know. And and we've all been there. You know, just you got to just think. And however, the beauty is, once you start learning these creative seller financing deals and structures and stuff, you start creating different ways and structuring deals that there's really not even terminology in some of these deals. I've done so many of them like that. So it's just let your mind just to make sure that you're doing it with ethics, you know, that type of situation. Always, always, always make sure you're always doing right by the seller, educating the seller, make sure things are doing correctly. And just if it's you're helping the seller out, it's not a problem. In most of the cases, it's all about that. It's helping the seller out, and then you whatever your exit strategy is. That's why I love this, is because where I really get the highs, yes, be helping a seller, but really I enjoy is really putting a family in a property that typically can't find a property through traditional financing through the local bank, and setting up through a structure like this and helping them out and getting into a property. And then down the road, they establish payment history on that property and they get everything in line. It's easy for them to refinance it and go the traditional route. But sometimes you can just keep them in place, depending on it, for years to come. You know, back in the day, the average loan was 7 years. It's probably going to change now because the rates are so low and people are not going to want to sell those loans. But that used to be statistically, the average was 7-year loans on most mortgages. They sell it, refinance, pull cash, whatever it may be. So, but that was some great stuff. Thanks for sharing on that, Jordan. So appreciate it. Matt?
We got another question over on Facebook. So we got, hi Mark, quick question. This is from Liz. There is a seller finance deal with a mobile. However, seller wants to rent the lot and sell the mobile home only, which could still be a good rental, but his asking for insurance and too old to cover everything else. What are your suggestions on how I can provide asset protection in the event of damages?
All right. So So he's gonna keep the land. So it's like think of it as like a mobile home park, which is fine. But she's asking about what was the second part of that question? I can't read it. So about you
What are
said
your
some damage.
suggestions on how I can provide asset protection in the event of damages?
Asset protection of losing the property. Is that, I mean, you have the deed to the property as long as it's go through a title company and it's structured correctly as like a land lease on that, you should be perfectly fine. I would also make a contract where he can't force you to move out or move the property as long as you're making the payments on time. You don't want that to come into it. You buy this thing, and what's he looking for? What's he looking for a down payment? I mean, all asset protection, again, I'm not an attorney, but you should always have yourself set up to protect your assets no matter what assets that you own. Um, again, I'm not an attorney, but look into Wyoming LLCs. You have something there, and then I actually have a great group that does like trust and stuff like that for asset protection. But yeah, and if this is your only one, it's just a mobile home. What I would probably do for me, I would just probably just do a Wyoming LLC. I would spend thousands of dollars on an asset protection trust at this time. That's just me. But I don't know what the other assets are that you may have. So it's hard for me to give that advice.
Okay.
But just protect yourself. What I would do, the first thing what I would look at if I'm going to do this deal with the seller, I want to see what my entry is, what much my cash flow is going to be. I always look at my entry. What's my cash flow? I want my money back in 12 to 18 months. And the condition of the asset, the property. Are you going to need to fix it up? And then are you going to put a tenant in there? Or are you going to try to selling it to somebody else? So those are the type of things you have to look at when you're looking at a deal. And then I would also make sure that, hey, I want to make sure you can't force me to move this mobile home if he's keeping the land. You don't want to be put in a situation like that.
Here we go. No insurance company offers coverage. It is too old. Um, how can I offer seller some protection if the rental fire or damages?
Yeah,
Where
what's this
is
thing
it?
worth?
Yeah.
Yeah. Where's it located to?
In Florida, I think. Yeah, Liz, let us know if it's where it's at and how much.
Maybe negotiate and have the seller be the insurance company. You could structure that way too. I've done that. Hey,
Or-
I can't get insurance. I want to pay you. So if something happens, I get my money back or I get the land, something like that. That's probably why the seller is selling. I would probably at that point, like, what's the purchase price? And you may not want to sell and sell off finance. You may want to do as a rental and have them get renter's insurance and just cash flow and just kind of like it. I would look at that. What's that?
1975 triple wide in Florida.
Yeah. It's gonna be
What's it
hard.
worth? If you can let us know what it's worth, Liz, without the land.
What's he want to sell it to you for? And what's he looking to get down?
And what'll it rent for?
Cash flow.
Yeah, it always seems like the cash flow gets messed up with the lot fees or lot rent.
Yeah.
99,000. How much will it rent for, Liz?
He wants 99,000 for this thing.
Is it rehabbed?
A lot. $1,400 in rent.
That's what she can get, or that's what he wants. Or, no, so he's trying to sell it to her for 99,000, and then she could rent it for 1,400 a month.
And what's your payments what's he want for payments? And then what's he want for a down payment for you to get in? And somebody else has a question. We'll come to her in one moment. And on Zoom.
Yep, rehab is very nice condition.
All right. What's he want for down payment and what's he want for monthly payments? She's typing that out. Do you want to go to the other question while she puts that in and we'll come
Yeah,
back?
go ahead and get Jasmine's question. Yep.
Hi, sorry, I jumped in a little late. I saw it was
Oh, good.
live. So I have a question. I have a property in Tampa. It was supposed to be a flip. I kept it. And I'm looking to do some type of creative, like sell it creatively, but have a couple of challenges. So, well, what first question, where do you usually look for like somebody that would want to do lease option or something like that? Like I posted it on Facebook Marketplace. I'm getting a call. Can you still hear me? I was trying to like ignore it. Am I okay? That's the first question. Like where do you find these tenants? Especially if I'm not in the area. I'm in New York and the property's in Tampa. So I've been just posting it, asking people that I know there. So it's a property that I was looking to flip and then I kept it. So it's my property, but I'm looking to do some type of like um seller I guess it would be like a seller finance situation. The
So,
interest rate is not great.
so wait, so you're doing, what do you mean interest rate? If you're doing a lease
So
option, it's usually that interest rate.
right, so there's a mortgage on it. So I was just looking for any suggestions. So there's a mortgage on it. If I rent it, basically if I rent it at market rent, it just I pretty much make nothing. So what I'm looking to do is I'm looking for somebody that doesn't qualify for banks and give some type of down payment, like some type of lease option. I mean, I'm familiar with some of the things that you mentioned, and I do have a good network and people that know how to like structure deals. But I guess my first question would be how do you find these tenants? Like where's that's the first question. Um, so or any
All right, let's
suggestions, I
go
don't
through
know.
that real quick. So, what, how's your ad structure? That has a lot to do with it. But typically, Facebook Marketplace is one of the great spots I do. The other thing is boost it, like up to 20 miles in the area. Create maybe a Facebook page and put the description there with photos as well. But then in the ad, like you're saying, what is the market rent and what are you trying to get too? That has a that will be a huge factor in there too, because the people are going to look at what the rents are going for, and if you're trying to go a little bit higher, it could be a little challenging. Typically, you can go about 200, depending on it, you can go about $200 to $300 over the market rent, but it's going to be
Okay.
challenging to get anything higher than that. But you can structure it in a way where they're going to be taking it sounds like it's probably in great condition, but you can structure it where they're taking care of the repairs. So you can structure it that way as well. So you don't have to worry about that. That's how I would do it. Um, and then what type of down payment are you looking for from these people? That could be another issue. What are you looking for?
Um, I mean, I know typical like if I just did a loan would be 20. So I would say 10 is 10. Sound
What's the market rent?
so market rent is around 1800, but the
Right.
payment, yeah. So basically, I did have renters and I found them on Facebook, but they moved out in 6 months because they just couldn't pay. But I actually got higher than market rent because a friend posted it as like the way he posted it was, um, this is what we're asking. There's an option to own. So people did answer the ad. Um, and they were like, "Oh, I'm interested," but then they didn't have like the area is not the greatest area. So it was like people were intrigued by like, "Oh, I can own something," and then when it really came down to, okay, I'll just rent. So that's how I found my renters.
Well, you could also structure it both when you advertise it, seller financing / lease option. So then typically if you're going to do seller financing, you're looking for maybe 30 to $50,000 down. If they don't have it, then you can structure it as a rent to own. And then you could sell it as an agreement for deed, or in Florida, we call it an installment sale if you have a loan in place. So you can structure it an installment sale if they had that much of a down payment. But most of them, they probably won't. So then you can,
Right.
but if you market as seller financing / lease option, you'll get more people acquiring about it, type of situation. Or like, hey, this is what I'm looking for, or you can do both. So you can kind of, because if you do get somebody that's willing to put that much money down, I'm sure you have no problem selling it the other way because you're getting more money, you're getting a lot of capital back. The other thing is, is that a hard money loan that you have in there, or is it a DSCR type of loan?
DSCR.
Okay. Yeah, you should be all right with that. That's how I would do it. Then I would do Craigslist. I would do bandit signs out in the area. Um, Zillow is another place. Apartments.com. Um, and then after a couple weeks, well, usually about close to a month, then I'll use a flat fee service, and then ask for a little bit more down and have them pay if they're bringing a realtor to the doors, if they're bringing a realtor in, then I ask for a little bit more down. Um, Loan officers in the area where people try buying properties, they can't qualify because they can't qualify traditionally, but they may have a down payment.
Okay. So just call these offices and kind of say, hey, I have this property.
Yep.
That.
Uh,
Okay.
what kind of offices are you thinking?
Well, you said mortgage or loan officers,
Yeah, loan officers, mortgage brokers, loan officers
mortgage
type of
brokers.
situation. Yep. Also post it in groups that are not real estate related in that area, or you could. I mean, there's like the rentals sections, in
Yeah.
groups. Do it there and like, hey, rent, possibly to own, just like what the other gentleman was saying. Make sure your photos are really good. The first couple photos. I had a VA one time. He was like putting the bathroom as the first photo. I'm like, what are you doing? We have that 11-second elevator pitch type of thing. So yeah, so just keep marketing it, and I would pay I would even pay maybe $5 a day to boost it, so it shows Facebook will reward it and show it to more people.
Okay. So what, as far as like the lease option, what is the typical down payment? And maybe if you said it, I'm sorry, I
What's
joined a
what's
little
what's your
late.
purchase price? What's the purchase price?
250, 250.
Yeah, I would shoot for 10 to 15,000 as an
Okay.
option fee. That's what I would probably shoot for. And
Okay.
then also find out if they have a 401k or an IRA as well, because they can use that to buy a property, one of these as well.
Okay.
But the market is taking longer to find even these type of buyers, so keep that in mind.
Okay. All right. Thank you.
And also maybe property managers too. That's another source. But bandit signs work well. Facebook, you can also do like I said, a Facebook page and then boost it, so then it shows in people's feeds and then also it shows up. So it's a little different than also Facebook Marketplace.
Right. So when you post it on Facebook, do you post it under rentals or sell?
Um, I do both. I'll do one and then maybe switch it. Because some people may not realize that, they could buy a property, they're looking for a rental. I'm like, oh, I could do that. And I've had people like, first time, family, their parents help put them some down payment too. So, you can do both. I've done both.
Yeah, I actually, now that I'm remembering I'm saying this, I think when my friend was helping me post this because he posted things before, he's like, okay, post it on there. I think if I put like 10 to 15, then people are of course gonna click on it, like 10 to 15, and then it kind of opens up like the whole thing. You know how people do that? I mean, even though it's like misleading, but it actually gets people to open it and see what it's about.
Yeah, perfect.
Yeah.
Good
Yeah.
luck with it.
Thank you.
Cool. All right, Matt, let's
right.
finish the other question, and
Yep.
then I think
We got
we're gonna be good.
Liz. She's down payments 40,000 and it's 1,000 a month.
I wouldn't touch it. Me. Nope.
Yeah, that's
Can't
a
get
lot.
insurance. You're too much risk. I would 40K on a mobile home that you don't own the land, and you're thousand, you're only making $400 a month. I would walk. You could probably buy 2 assets, maybe 3 assets with that 40K easily.
Okay, and we got one more question. If you are cool with it, Mark, you have time.
Sure. Yep.
All right, we got Kasan here. Hi, Mark. I have access to the VA loan as a veteran. However, my credit score is too low currently to get approved at the moment. I'm a carpenter trying to find my first property. I came in a bit, so you may have touched on it already, but I have access to about $10,000 and I'm trying to use that as a way to get into my first property, even a fixer. Any tips would be helpful to find the right seller.
I mean, I would definitely go back and watch this will be posted in the Seller Financing Homes group afterwards. There's actually several videos in there, but under featured. But I would definitely go back and watch it. But just start calling sellers. One of the things I always like to do in my approach when I'm calling sellers is, again, I talked about this in many of my videos. When you're doing seller financing, you have to treat it like a marriage. You have to get to know each other, them know you, and vice versa. It's all about a marriage. And then what I would do is start calling sellers, and I like to ask a question. Hey, it sounds like a beautiful. Ask them about the home. It sounds like a beautiful property. Why are you selling? And I shut up. That's the motivation. They're going to tell you the motivation, not most of the time. Sometimes they'll lie, but most of the time, if you build a good enough rapport with them and they trust you, they're going to tell you the truth. And then I like to ask a question: would you be willing to rent the property to us for a few years, and then we close on it? Love that question, because if they say yes, then I know they're open to terms. And I take care of the maintenance and repairs. That's usually what I tell them. Up to like 35, 4,500, anything more than that, most likely the homeowner's insurance kicks in because it's some type of water damage or roof or something like that. Um, that's what I would do. But there's so many, and if you go back and watch, there's so many different ways of how to find deals. Jordan was just kind of telling us another way not too long ago. So when you go back and watch the video, he gave us an example how to find. But there's so many different ways about there finding sellers. But if you want to jump on a call, we can talk. Matt, you did a typo there in the Zoom one. I don't know if you saw that. The one you just put in there. You just put CA. Um,
Oh.
Yep.
Oops.
So, yep, no problem. But definitely you want to get out there and start locking up some real estate, especially right now. It's a great opportunity. And then, reach out to a different credit repair company and start working on getting it, especially if you got $10,000, you shouldn't take you much to kind of get your credit lined up. But again, I don't like going through lending institutions. I love doing some deals with sellers. Because that $10,000, you can technically buy a couple assets if you do it the right way. Like I was mentioning, one of the members today was bringing a deal, talking. He was locking up a deal for $1,000. Matt has somebody that he was just talking about. His buddy, his good friend, that's another investor. He's doing a deal, locking up for 0 down, just some closing costs on that one. And you said the property's in good shape. I think you said, Matt.
Yeah, just
Yep.
the guy smoked in it. You just gotta get that smell out.
Okay, that's not too bad. And I get a lot of deals from for sale by owners. I also even renters. Like I would go onto Zillow or Zillow, I would go to Facebook Marketplace and I'll call renters because a lot of times these people were trying to sell the property and they couldn't sell it, and that's why they switch it over to doing a renter. They're just trying to get somebody in the property. I think Jasmine's probably was trying to sell her property and she couldn't. That's why she was putting a renter in it. So she's a prime candidate. Maybe reach out to her. She'll sell you her property. Where you located? She's looking for that $10,000 down.
There you
So
go.
it was good.
Yes. Now, guys, if you guys want to learn more about Mark's mentorship, just go to sellerfinancingstrategies.com/call. I put it in the chat. I put CA on the Zoom chat. I'm sorry. Mark, are you able to copy and paste that and put 2 L's at the end? My
Ken.
my mouse just died on me, so I gotta go get my charger for it.
Matt, what was that again? Seller finance what?
sellerfinancingstrategies.com /CALL call. And you'll see
Apparently there's no one. Why is it saying did that go through? There
I
it
don't
is.
see it.
Oh
Nope.
no.
No, you're
I'm getting
doing it to the waiting room. You gotta turn it off to make sure it's
oh,
to the whole meeting room.
that's
Meeting
why.
group
How do
chat.
I do that?
There you
Waiting
go.
room.
Thank you, Jasmine. Look at Jasmine. She's crushing it for us. Yeah, my mic. I can't mute myself. I can't do anything right now. It's dead.
It's
So
weird. The only place I can post is the waiting room. That's so bizarre. Oh
you
well.
gotta click that little two where it says two. You gotta click that, and it'll let you select who you're sending the message to. So
Yeah, I can do you. Anyways, she took care of it. Thank you, Jasmine. I enjoyed it. I like these questions. So thank you so much, everybody, for coming on. And hopefully this information was helpful. Jasmine, good luck on trying to sell that property. And I forget the gentleman's name. My Facebook's not coming up. And good luck trying to buy a property. So, but if you guys have any questions at all, feel free to reach out.
Thank you.
Thanks, Mark.
Thanks
All right,
everybody.
guys.
Have a good one.
Have a great night.
Thank you, Mark. Thank you, Matt.
Take care, guys.
Where's Joel?
Good night.
Bye.
Bye-bye. Ending Zoom.